Check, 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 check one, check two. What's going on, folks? I'm just checking something out right here, so don't mind the attire. But I am going to do a little quick information session. I like to call it, where I'm going to show you guys what I'm looking at for next week. All right, mind you, this is not any type of investment advice or anything along those lines, but I just want to go over some information with you guys that some of you guys may be able to profit from. Right. So one of the things that we have going on right now is the fact that they are trying to tame inflation, which means that well, they actually been battling inflation, which is why we've been having a lot of why we've been in a high interest rate environment. You know, credit card rates have gone up. Interest rates pretty much on anything that you could think of have gone up, from housing to um, to credit cards to automobile loans, personal loans, all different type of interest rate products that you as the consumer or the borrower have to pay. So with that being said, now that the Federal Reserve, aka the Fed, has been battling inflation and things are starting to calm down now they're going to start lowering interest rates. Okay, usually that's not a good sign because that means that we're at the top of the kind of business or economic cycle, right? Especially with how things have been going on right now. I'm not going to get all technical with you guys, but I'm just going to go over charts. I'm going to go over a few things that I'm looking at going into next week. The first thing being the IWM, which is the small caps. Now, small caps, those are pretty much small companies that usually for them to borrow money, it takes a lot more requirements for them to borrow money. And when interest rates are high, it's more of a burden to the company, all right, or to their financing and so forth. So now the interest rates are starting to come down, or expected to come down. These companies are most likely going to benefit, which you can see. This is the IWM, which is the Russell 2000 ETF. Okay, and you can see this yellow area I have highlighted that I have highlighted here is a range that it's been in since back here of 2022. All right. So we've been trading in a range since 2021. Well, no, excuse me, 2022, 2023, and now we're over here in 2024. And you can see something that's taken place, which is the fact that now we are actually starting to trade above this range, which means that there's starting to become more buyers than sellers, which most likely is going to start this uptrend, which you see taking place right here. So if I zoom in, all right, let me just zoom in a little bit more for you guys. 1 second. If I zoom in, you can see we had this move up, okay, and then we've had this little kind of upward sloping channel. Whenever you break the top of a channel, it's bullish, whether it's at an angle. That means it's pretty much just picking up a faster acceleration speed to the top side. So that's kind of what we have going on right now in the IWM, which is why what you see it broke the top of this range here, and now we're kind of consolidating off of this recent up move that we've had. Right, so now I'm expecting this to go higher, and the IWM ETF, it's pretty much like a basket of stocks. So there's 2,000 companies in this ETF, but mostly the sectors that are in this ETF are like banking stocks, energy stocks, and other small type of companies. But it's mostly weighted by banking stocks and energy stocks, which is why you see those sector ETFs like the XLF, all right, going up. More or less, it contains a lot of regional banks, which is the KRE, which is why you see the KRE taking off. Same thing I told you. Or when you have an upward channel and we break the top of that channel, that usually causes an acceleration. You know, volume picks up, shows you that a lot of that activity going on. So I'm watching the IWM going to next week, small caps. Like I said, OIH, which is the energy ETF, oil drillers. You can see this thing starting to take off as well. It's making higher highs and higher lows. So you can take a look at some stocks in that sector. But overall, just to keep it simple, you can just look at the IWM, the Russell 2000, and play the ETF. Now, I'm a big fan of options trading, so I like to trade options. So you could go out, someone would probably go out and take a look at the monthly. So the third Friday is the expiration for the monthlies, right? So the third Friday for for August is going to be August the 16th. So I can go ahead and take a look at the August 16 contracts on the call options. You buy call options when you expect the investment vehicle to go up, or like a stock or an ETF or something, right? And then you could buy it around you could take a look at buying it around the current price. So right now, 225. I'm not going to go into details how options work. That's a little bit different thing to get into. Takes a lot of understanding to a certain extent. But what you can do is you could take a look at the 225 options for August 16th. So I'll add that to my watch list. All right. And then I can take a look at that chart, IWM 225. Take a look at the chart. And you can see this is the daily chart. So every candlestick represents the daily chart. You can see the same thing here, where it's going up and it's pretty much in this little tight little range. So once it breaks over the $6 area, you can see it go back to the highs that it had 2 weeks ago, 776. So the buy one options contract is going to cost you $529. You pretty much take the price, 529, and you multiply it by 100. So you can invest $529. And if this option goes from 529 to 776, you take the difference. Right, so let me get my calculator out. You take the difference, which would be, and I can do this all in my head, but I'm just showing you guys right here. Right, you take 776 minus if you bought it at $5.29. That's a difference. You multiply it by 100, and you can make $247 per contract. So if you have, if you were to have, say, 5 contracts, you multiply it by 5, and you can make $1,235. Right? How much is that going to cost you? Well, you take 5 times 5, 29, times 100, because every one contract controls 100 shares. Okay. And there you get it. So it's going to cost you $2,645 to make that 1,000 amount. So, uh, you divide that by the 1,000, 1,200 number I told you guys, multiply that. Actually, 1 second. Divide that by 100 times 100. Oh, I just did that wrong. All right, 1 second. You take you take the 776 minus the 529 divided by the beginning price times 100. You can make 46% of your money. All right, so that's something I'm watching. That's something I'm looking at. Again, I'm just giving information. This is not advice or recommendation. Just something that I want to share with you guys. So quick video. This is on everyone's radar. Everybody's expecting this ETF or index, the Russell 2000, to continue higher. Now, obviously, this is just my first video. I'm going to try to start getting some more information out to educate the people in my circle and the people that want to get educated. All right. So don't mind the attire. This is just something I'm doing right now, late night. But be on the lookout for more videos when I can. I'll also have a lot of other things in the work, so I'm not going to be putting out a video like every night. And I'm going to get the lighting and stuff situated. I'm trying to build out something here in my new spot. But I wanted to share this information with you guys. Have any questions? Feel free to give me a shout. Again, this is for informational purposes only. I'm not telling you to buy or sell anything, and use it to your advantage. Peace.